Welcome to the London Outlook for Monday, the 4th of March 2024. Starting off with the economic calendar, as you can see, there are no red folder news events, and thus we can move straight onto our daily chart where we can see that, as anticipated, last week we had three bearish candles, and thus we expected Friday to be bullish, and that pretty much pretty much was the case. So moving on to the 4-hour chart, we can see that 4H market structure is confirmed bearish. We do, however, also know that the pullback primary leg was extended, so that validated identifying the pullback last point of supply, which we then reacted to and now are pushing to the upside, with the objective of the pullback last point of supply to reach deeper into the pro-trend extreme, at which point the pullback to trade counter trend will require new pullback last point of supply um, backing, and then we can further trade against the pro-trend extreme. However, that's still a whiles away, and we still have reason to trade to the upside until this objective right here is achieved. However, what we can also see is that Friday actually wicked this level and validated the pro-trend primary leg, and that's simply because of the fact that we are reacting to a pro-trend extreme, making it more likely than not that the pro-trend move will ultimately play out, in which is why this leg is forming. However, there is a slight chance, a less likely chance, that this is just creating liquidity to push us deeper into this pro-trend extreme. We do have that unmitigated OB sitting right there. So what does this mean for our trading for today? Essentially, we'll focus on shorts, however keeping in mind that longs are still valid. However, because we're facing this barrier right here, it's important that we actually ensure that we build new internal range liquidity and don't rely on the internal range liquidity forming here, because this is a new 4H OB pro-trend barrier that is quite significant. So for those reasons, we'll focus on shorting rather than longing until we can validate additional IRL subsequent to the reaction of this OB. And by that I essentially mean that we create IRL like that, we put in the low of the day, we validate the low of the day, and then we consider trading with the objective of seeking that liquidity, and our counter trend target being this level right here rather than that level until the point where this pro-trend primary leg is body broken, and we have confirmation that, because there isn't any unmitigated OBs in here from a 4H perspective, we can assume the rest will be internal range liquidity, and there are no barriers because everything has been cleanly mitigated. So that's the premise behind this idea right there. And is why I'm rather focused on finding those short positions rather than counter trend long positions. So what I will do is I'll put an alert there to say once we do break this, monitor for counter trend plays. Okay. And then in terms of navigating the London outlook for finding short positions, essentially what would be ideal is price would come up, take out the Asia high, create a Frankfurt high of the day. That Frankfurt high of the day will then be, in an ideal scenario, be validated by London. We'll then take a London short position. Provided that this Asia liquidity stays intact, it would be ideal, as it will be an extra confluence for why price should move to the downside. And if this is still intact, then whatever London trade I take, I won't break even until we actually wick this, with the ultimate objective obviously of targeting the swing low right here. And being it a Monday, there's a chance that this could be the high of the week, so whatever position we do take, I will try and rather hold it, if we can say that we likely at the high of the week, but also ensuring that I take some partials. So that's scenario one. Scenario one is the Asia low remains intact, and obviously we got this high low of the day situated right there. So as long as that is intact, then that makes gives us some extra confluence for why price should go down. Alternatively, price could take out the Asia low, then print a new high of the day Frankfurt, and then London can validate it. However, if that doesn't happen and London puts in a new high of the day, then we will need to wait for New York to validate that the London high of the day will hold. Um, so from that perspective, the reason why I'm saying we'll have to wait for the New York session to validate why the London session should hold is simply because we have no red folder news to rely on, and that's the best method of proceeding. So the key points of times to monitor is obviously Frankfurt open, London open, and then New York open and the subsequent session, and then setting alerts for once new high of the days are set by Frankfurt or London or New York, setting alerts for the points at which they will we will validate that session's high of the day is likely to hold. Obviously, if New York puts in a high of the day, then it's more likely than not that we got the daily direction wrong. And of course, since we don't have red folder news to support why New York's high of the day should hold, we can't trade based the New York high of the day. So that's pretty much a general outlook of how I'd navigate today. I hope you have a good trading session, and we'll chat again for the New York outlook.